been verified time and time again the last week or two that there's something going on. And I'll stick my neck out. I was conservative on the last segment. I'll be a little more bold this time. If the Chinese retail market has caught on to the silver market, watch out. I mean, you've got 1.4 billion people. Now, not all of those people are going to be silver investors, I realize. But the point is, there's a lot of Chinese, and they love the markets. So that's really the driver, solar and Chinese.
Over the past few months, financial commentators and metals analysts have been discussing the relationship between the rise in gold and silver prices and increased demand for the metals by Chinese investors. A key indicator of this trend is the People's Bank of China, which has been consistently increasing its gold reserves for the past 17 months, a move that underscores the country's significant interest in acquiring gold. This, coupled with the substantial increase in gold demand recorded by the Shanghai Gold Exchange, points to a strong domestic interest in gold. China's increasing role and influence in global affairs and geopolitics is not lost on experts. As the Asian country continues its campaign for a multipolar world, experts believe the diversification into gold will become even more pronounced as gold purchases are seen as part of its long-term plans to become a superpower. Chinese retail investors are playing a significant role in the gold and silver market, showing a rapidly increasing appetite for precious metals investments, particularly gold and silver, to diversify their portfolios and seek stability and security amidst global economic and geopolitical shifts. This frenzied demand for gold and silver among retail investors in China is a response to the chaotic local property and stock market. And with the Chinese economy facing even more uncertainty in the coming months, experts expect more frenzied buying of gold and silver, particularly silver, the cheaper alternative. On May 29th, silver reached a new high of $36.52 per troy ounce on the SFE, according to a social media post from Bai Xiaojun, a popular Chinese precious metals analyst. Looking ahead, prices are expected to rise even higher in the coming months as the local economic situation and increasing geopolitical tensions propel the 1.4 billion population towards safe haven assets. As a result of these expectations, renowned precious metals analyst and publisher of the Morgan Report, David Morgan, forecasts higher silver prices in 2024. During a recent interview with Investing News, the popular financial analyst discussed his outlook on silver prices, carefully analyzing why silver should be trading much higher and what must happen for prices to go higher. We will now bring you clips from the interview. But before we do, please help us reach more viewers by giving this video a thumbs up, sharing it with others, and subscribing to the channel. You can also activate the notification bell to be instantly notified whenever we upload a video. Thanks for your support and enjoy the video.
I think I made the right call on gold, and here's the call on silver. It is a breakout. I have what's called the Morgan rule. My premium members know it because I use it in some of the updates I do for the membership. But it's not infallible, but it's a high probability. So whenever we get a new level, we look at the market to go above that level. It must go above that level 3 days in a row. It can go below the level during day, but it has to remain above that level on OCO, on close only, which is a trading term. And it needs to be on above average volume. So if you have those things, 3 days in a row, above average volume, over a new hurdle, you have about an 80-85% probability that the trend will continue. That's a very high probability. So we had that with the $30 level in silver. We got up to, in the last 5 days, traded over 32. Now we're just over 30. 30 is held for the last 2 days. It could dip below it. I mean, we could see it could go below it. I mean, I admit that we don't know for certain, but we've certainly breached the $30 level significantly enough and for long enough of a time for that to be what I call psychological confirmation as well, which means that people get the idea now that silver's traded at $30 or more. Silver is acting strong, and yet if you look at some of the features you would normally expect to show strength, they're not there. What I mean by that is the retail market doesn't believe this move. In fact, I just talked to the third dealer today, and they're getting more sells than buybacks. So a lot of people that bought at 25 with a high premium and they paid 30 or whatever, saying, I could get 30 for it on a sale or 31 or what it is, whatever. So that wouldn't add to, a higher price. In fact, a lot of selling would take the price down. Obviously not doing that. The main factor is two things. The amount of uh, inaccuracies in how much was used in solar last year, I think, is weighing on the solar industry. And so there's that. And then on top of that, the futures market continues to go higher and higher. And a lot of that has to do with the Shanghai Futures Exchange, the SFE, because there's an arbitrage available between the price of silver on the COMEX and the price of silver in Shanghai. And it's significant. It costs to play that ARB in the physical world. You've got to buy it at the COMEX, and now you got a lower price, maybe $2 an ounce, $3 an ounce. That's a heck of a spread, but now you've got to ship it or take an airplane or something. So there's transportation costs to get the physical there. So it's done synthetically, which means in the paper markets. But the point being is they are setting records in the Shanghai Futures Exchange, and most people don't pay attention to it or know where to look. And I was a little hesitant to jump on the bandwagon. Ross Norman was about the first one to write about it. And I, get a lot of information from a lot of different sources, and some are more trustworthy than others, blah, blah. But this was okay. So I started looking at hard. It's been verified time and time again the last week or two that there's something going on. And I'll stick my neck out. I was conservative on the last segment. I'll be a little more bold this time. If the Chinese retail market has caught on to the silver market, watch out. I mean, you've got 1.4 billion people. Now, not all of those people are going to be silver investors, I realize. But the point is, there's a lot of Chinese, and they love the markets. So that's really the driver, solar and Chinese.
Over the past few years, the whole narrative around investing in silver has gradually shifted. The metal has gone from being considered a purely monetary metal to being viewed as both a monetary and industrial metal. But at the moment, silver is almost purely considered an industrial metal. Some experts even compare it more to copper than gold. According to Morgan, this is the exact reason why the metal is not performing as expected, because the narrative around investing in it has changed. So, for anything to change for silver prices, we have to return to the old narrative by appreciating silver's status as both a monetary metal and one with incredible industrial uses. In addition, Morgan explained that institutional investors have to start buying silver. When they start buying, prices will rise, and other investors, especially the embattled retail investors, will at least break even on their investments and start buying again.
Yeah, this comes from Matt Watson, and I was introduced to Matt by the Silver Institute, so I want to give him credit. It's his graph. But what he shows is that the amount of mined silver and recycled silver remains flat for several years going forward, and I think he's right based on the fact that we've had a flat silver supply for the last decade or so. It's ebbed and flowed, but it's stayed within a few percent. And recycling, the same thing. So if you take that projection as being a valid assumption or near valid, and then you look at what the demand side is, and it continues to increase. And we know that has been significant, especially in solar. And solar just keeps getting bigger and bigger. Quick example I wrote in the Morgan report a couple months ago, Charlotte. You are sitting down, good. Because the solar farm that's being put together in India is the size of 5 Paris, France. So think of the size of Paris and multiply it by 5, and that's the size of the solar farm. So that's a significant amount of silver. I guess, again, when you think it's 20 grams per solar panel, how many solar panels are we talking about? So when we saw that big import into India, I would say that was all or most all of it was for this solar farm. That is a trend. More and more of this, go green, be green, alternative energy, all of that portends a lot more use in silver, and maybe more than these people understand is really available. So it's quite bullish. Gold moves opposite the stock market. Does it move opposite the US dollar? Yes, but it's actually more inversely correlated to the stock market. So now let's think about that. The stock market's been making new highs, and yet gold's been making. If they're opposite, and they are, that's correlation. I mean, not 100%. Nothing's correlated 100%. That says that gold is really strong because normally in a strong stock market, it doesn't do this well. So even though the price is nominally high, and that's good, it's probably not nearly as high as it would be in a weak stock market environment. On the interest rate things, I'm a bit of a maverick. Really, to me, and time has shown this, interest rates do matter. Absolutely. It's the cost of what we call money. But you really don't get it to affect gold until the interest rate is equal to or greater than the true inflation rate. And the true inflation rate, basis John Williams, shadowstats.com, I don't know the number. I listened to a recent interview, forget the number. I'll say 10%. And we're using a 5.5% yield on the bond right now on the near term. Cutting interest rates will help the gold market. They cut them here. But the way to really, move gold down would be to move interest rates even higher. But they're not. Could interest rates move higher? I'll be maverick again and say they could, but nothing monumental in my view. I mean, could go a half of, 500 basis points. Could it go full basis point and go another percent higher? Could. Will it get to 10%? I really doubt it because there's too many variables that depend on the cost of money, and one of them is the interest on the national debt. You just get it too high, you'll collapse the economy. The Fed's in a rock and a hard place, and gold senses that, and it's forecasting higher prices, which really isn't higher price. I mean, it's a higher price, but what it really means is the dollar is losing purchasing power because gold is a constant. An ounce of gold is an ounce of gold. That doesn't change. It changes the price. So why is the price changing? Because the dollar is deteriorating. And I think that's inevitable, regardless of what the Fed does with interest rates.
One scenario several experts, from David Morgan to Andy Schechtman, have about the end of silver and gold price suppression involves the complete breakdown of the current financial system. The world's fiat-based debt system is propped up by central banks, which consistently debase all currencies and lower their value by printing recklessly every time they run into a challenge. Over the past 5 to 6 decades, central banks like the US Federal Reserve could and did print as much as they wanted. However, that might not be possible for much longer. The United States, for example, now has a 130% debt to GDP ratio. Experts warn that this has been a point of no return for other countries and empires that have fallen from grace. No economy that has reached a 130% debt to GDP ratio has been able to get out of the problem without a nasty default. This is why financial experts and sound money advocates have been warning about the impending collapse of the United States economy. Morgan believes that time is much closer than everyone believes, and when it finally happens, everyone will be rushing towards safe haven assets like gold and silver. According to the publisher of the Morgan Report, savvy institutional investors will be the first to make this realization, and they will rush to invest in both metals. Please share your thoughts on Morgan's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.